Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hello and welcome to the Conscious Day Trader. I'm Yanis, and today we're going to break another ICT trade that was quite profitable. It was during the London kill zone, and it was for roughly around 60 pips. So let's go over to TradingView, and here it is. I thought that I'll bring this in just so I can remember where, because sometimes I do the videos the next day, so I wanted to remember where my entries were exactly. I've talked about this box before. You can find it on the indicators called the FX market sessions, and I've changed the times to make it into the kill zone time. So how did I find this trade? What was my bias and what happened? I'll show you the results as well. But first of all, let's go back to our daily and see what's happening with the pound dollar. So as you can see, we've been, since the big sell-off last Thursday, a week ago, we have the price hasn't been able to recover. If you take a fib retracement from that single candle there, you'll see that it never retraced back to 50% and is continuing on its way down. So let's have a look on what's happening on the daily. This is the information I had, and these red arrows are there to help you see where I entered the market. And as we can see, we put in the previous daily low and the previous daily high from the wicks, and we also identified where the fair value gap is. You might be thinking that's not a fair value gap, and that's because it's not on the daily, it's further down the time frames. But my idea was that the price, I was originally, my bias was long, but I wanted to see some conditions for that to happen. And one of the conditions are a break of structure on the lower time frames, and the other condition is a fair value gap. And we're going to see both of those when we go down the time frames. But from the daily bias on the top here, you'll be getting used to me marking these up, and you're guessing right. This is buy side liquidity. This is an area where you see here equal highs of the wicks. This, especially this area here, the market will want to come and take that buy side liquidity, because most of retail traders see that as a resistance point. So they will trail their stop down if they're going short. So the algorithm will just come back, take the buy side liquidity, and then continue downside. And the bottom, if you want to identify the sell side liquidity, we did take out this sell side liquidity on Wednesday. Down here, and the next obvious target would be down below this swing low here. But like we said on the previous video, this is quite far down. But my bias is that if the price continues to fill this value gap and breaks to the low side, that will be filling down this swing low. If not, it needs to be retracing. My bias was long because I think before we get to this level, this buy side liquidity will be taken out. So let's go down to the 15-minute. And I've also put the equilibrium in, which is the 50% mark from the daily high to the daily low. It doesn't have to be the daily high and daily low, but if you look at the price action, you want to take it at the most obvious swing high and low, and this is the highest it's been since Thursday the 20th of December. So you could potentially take the high from this point, which will give you the whole swing of the move, and that might be a good idea to do today, because I basically did it quickly there. And that's the only reason you're putting that, is to identify if the price is in a discount or is in a premium price. And if it's in a premium price, you'll be selling. And if it's in a discount price, as in below the 50%, you'll be buying. So let's see. We're going to put our line. Let's go to, let's see what time we're on, London. So I started looking at this at 7. Okay, so we've moved up to 7 o'clock. And as I said earlier, what I was looking for, this is trading. It opened during the night after 12 a.m. So the new day, the market pushed higher. Okay, went straight into equilibrium, where I deemed to be the 50% of the equilibrium on the daily high and the daily low of the previous day. What happened next? It came down, and find here you can see it started creating. This is at 6:45, creating a resistance. These equal lows, these equal lows are areas where the market will want to be looking to take out. And if it takes that out, where would it potentially go? To fair value gap on the bottom here. And you can see that from the top of that close to that wick there, there's no wick or candle to fill that, the orders. So let's see what happened. As you can see, I was waiting for a break of structure of this, then find a fair value gap and short it. And let's see what happened. So that is a clear break from the structure. So now I've got a confirmed entry to go short. And if you remember, I did say that my bias is long, but the price action, and we're still in discount, so technically I should be buying this. You should be waiting for a break up and so on. So my bias for long was that the market will come down, fill this fair value gap, and then I would look for a break of structure on the upside. But this London zone here, which I'm looking at 7 a.m. till 10 a.m, showed a price action for that move to come down. So even if I'm lower, because we're talking about 15 minutes candles, I can play this down into the fair value gap, even though my bias was long, after it would fill this gap. And then if my trade was, I hadn't got a nice fill, I could wait for the long bias that I was looking for later in the day. So I got a fill in this fair value gap here. I've labeled it in the gray. So you can see from that wick to that wick, we had a nice fair value gap, and that was my first entry. I started small, 0.25, and then I built my position as it filled more of this fair value gap. You can see there was a fair value gap there, and on, believe on the 1 minute, there was a fair value gap there. So that was my last position up here. Let's go to the 3 minute. I normally trade the 3 minute. Fair value gap there, that was the last position. My stops were, but this one, sorry, my stops were above this high. So we did get close to the stops, but as we said, I started small, 0.25, and then built half a position, another 0.25, and then half a position, another half position. So my total risk had the same stop, so it wasn't as bad as it would look if I was taking a full position from down here. So that's called scaling back, or scruffy madness into a position. If you don't know what scruffy madness means, go to the Scruffy Trader on YouTube, and you'll find this. He has a Discord where he breaks everything down, so that's pretty cool. Back to ICT concept, what happened here? It came back, took liquidity out of this, filled that fair value gap, came down, came to retest and fill these fair value gaps, and then continuation. So let's see how high it went. And we got filled. We were close to getting stopped out, but we didn't. So then what happened? I was quite comfortable with this risk. It was in my £200 loss of the day. So, and I was looking for that to come and fill that fair value gap. In reality, I had a strong belief that these orders would be filled, and if we looked on the daily, it would go down to that swing low that we were talking earlier. So let's see what happened after I've got a full position fill. The price came down, got a wick. That's why I like wide stops, because when the wicks come in, you don't want to be taken out. And let's see, look how that looks. I made a mistake. My stop was here at this area here. Swing low. This looks quite far away, but if you manage your trade well in your position size, you never get, because what's happening, I am closing positions as this goes against me in profit. And I don't want to give everything away from the Scrappy Madness, so I would recommend you go and watch it. But if you see there's opportunities on the way where I can take profits from positions, here, as this is pushing back into my hard stop, and eventually the price fills the fair value gap, fills the second fair value gap, and here this was my target, the swing low, the forward swing low, and again, I haven't got better at holding my positions because, as you will see, this price skyrocketed to my original plan. So I've only been able to do it once on a DAX trade where I trailed my stops. But if I review my trade here, there's no reason why I can't trail the stops here for break even. And also it's Christmas, so I wanted to take the profit and went into that fair value gap. And if you look on the daily, this is the big fair value gap that we thought is going to be going to. So that could potentially be filled after it fills that buy side liquidity that we talked about on the daily. So it gets the liquidity, pushes the market down, and then continuation. So as you can see, these fair value gaps get respected heavily, and I've really been enjoying trading the ICT concept. And there we go, look at that fair value gap. I hadn't seen what happened in the afternoon. So if I was long, like we said earlier, if I got filled in this fair value gap, I didn't build into the positions. I would still get my, let's see how much that would be. I would still get 20 pips out of this. So my one position would get filled and I would have made it. If it came back and I filled on the second one, I would have made another 20 pips or break even. So as you can see, it's quite nice that these fair value gaps do get a response. And you get, even if you get it wrong, the bias, like my bias was long for the day and it's going short. I did trade short, but I would still made money if I was going long. And look at that. Let's go back on the daily. Beautiful. Just went straight into to fill that gap that we were looking at the lower time frames, and it's been rejected for this sell side liquidity. So potentially, where is it going? On the top for buy side liquidity. And we'll find out on Friday what happens. And I will show you the results and we'll go from there. In terms of the results, as you can see here, we've got 229. And also after commissions, obviously, that gave me a $219 profit. If I had let it, that would have been a lot more money. And that is something that I continuously say that I'm working on to get bigger at trailing my stop and letting those profits come in. But I'm super happy because this is new, and I would suggest with any new strategy, just make sure you have some protection around your account first before you start, scaling in or risking more into a trade. And this has been so far a successful story with the ICT, so I'll be continuing to do it with the London Open, and it makes sense for me because I'm going to be moving to Bali very soon, and that will be lunchtime for me. So it's a good time. I'll be able to have time with my family in the morning, do my trades at lunchtime, and then maybe go surfing in the afternoon, who knows. So there you have it. That's another ICT trade in London kill zone. GBP-USD. Make sure you subscribe and like the video, because that helps me make more videos of these and motivates me. But also, if you have questions about this, drop a message in the comments. I always respond to every message. So I'll catch you tomorrow for another maybe the last trade of the year, since we've got Christmas. And if volume will be low, so we'll see if we get something. If not, we'll start from the New Year's and onwards. Catch you soon.
I can't take no loss.